2023 was a great year for stocks as the markets rallied to near record highs in late December. However, not all companies surged. It's 2024. What do the statistics show? Which investment categories are excelling? Warren Buffett, a highly esteemed billionaire investor, shares 5 valuable insights to help shape your investment decisions for 2024. And those who watch until the end of the video will receive a bonus tip. Before we jump into the top places to park your cash, you might want to boost your business without spending a fortune. Check out Workerd.com, a site for affiliate marketers to advertise at zero cost. You can post ads for free on this platform. Whether you're looking for specific items or services, this site has got you covered. Utilize their free business listing to showcase your business at no cost. Now, what's the economic outlook for this year? What are the trends for this year? This year, anticipation surrounding the Federal Reserve's decisions on interest rates has been high. At the Federal Reserve's second meeting of the year on March 19th and 20th, they chose to keep interest rates unchanged. This decision follows a similar stance to their first meeting of the year in January. The federal funds target rate has been maintained at 5.25% to 5.5% since the summer of 2023, representing the highest level over 2 decades. This year, predictions indicate a decrease in economic growth as a result of rising unemployment rates and diminishing inflation levels. Do you have a financial cushion in case of sudden unemployment? Have assets. Asset number 1. Invest in U.S. stocks. Economic downturns often stem from a slow economy, frequently linked to elevated interest rates. As interest rates increase, asset values tend to decrease, affecting the worth of your stock portfolio. Warren Buffett likes to buy more stocks than he sells, especially if he believes in them for the long haul. If you're confident in picking and holding on to stocks, 2024 could be a good time to nab some deals.
You'd have a Cuban Missile Crisis, and you'd have nuclear weapons, and you'd have a panic in 2000, financial panic, and you'd have many recessions, and you'd have war in the streets in the late 60s from a divided country. You'd say, why the hell are you buying stocks? And through it all, America in fits and starts, but America really moves ahead. And
Buffett suggests focusing on U.S. stocks for a successful long-term investment, primarily through index funds that track the U.S. stock market. Buffett's been mostly invested in U.S. stocks since 1942, and it's worked out pretty well for him. By spreading your money across different stocks, you lower the risk of one investment taking your whole game. America has been great for investors who've kept calm and not overreacted. Warren Buffett says don't stress if your stocks drop in value. Selling them just because the price goes down is a no-no in his book. Instead, pick stocks you're into at prices you're cool with and hang on to them for a while, like 20 years. In fact, Warren Buffett recommends not checking your stock prices every day. It's like owning a farm or a building. You wouldn't check their value constantly, right? Treating stocks as if they're always up and down is a mistake. As for potential investment opportunities, here are some growth stocks suggested by CFRA analysts that have demonstrated at least 15% annual revenue growth over the past 3 years, along with their expected changes in stock price. 1. NVIDIA Corp. NVDA, 6.1%. 2. Alphabet Inc. GOOGL, 10.1%. 3. Meta Platforms Inc. META, minus 1.9%. 4. JP Morgan Chase & Co. JPM, minus 3.4%. 5. Tesla Inc. TSLA, 61%. 6. MasterCard Inc. MA, 14.2%. 7. Salesforce Inc. CRM, 7.2%. 8. Advanced Micro Devices Inc. AMD, 11.3%. 9. Intuit Inc. INTU, 11.1%. And then Caterpillar Inc. CAT, 0.5%. Asset number 2. Exchange-traded funds. ETFs are like a mix of investments, such as stocks and bonds, in one bucket. This mix helps to spread out your investment and lower the risk. It's different from buying individual stocks because, with ETFs, you're investing in many companies at once. ETFs follow a specific stock market index, like the S&P 500, so they tend to have lower fees than other investments. You can buy and sell ETFs easily throughout the day, and some even pay dividends. This year, the core rate, which shows how much you can earn from your investments, is expected to be between 8.8% and 9.2%. On the other hand, the variable rate is estimated to be between 20% and 24%. The difference between the two is that the variable rate offers a chance to make more money, but it also comes with more risk than the core rate. So, if you invest based on these rates, the core rate is safer but with lower potential earnings. In contrast, the variable rate has higher potential earnings but involves more risk. ETFs can be an excellent way to start because they offer diversification, and you don't need much money to get started. To begin, you'll need to open an online account with a broker, deposit some money, choose the ETFs you want, and pay attention to any extra costs involved in buying and selling them. Some of the best performing ETFs in 2024 include ones like iShares MSCI Turkey ETF and WisdomTree Japan Hedged Equity Fund. Remember to research, choose the suitable ETFs, and monitor any costs involved. Now, what if you want to become your own asset? Do you want to sell your skills or services online? Take a look at Workity.com, a free advertising platform designed for job seekers. This website serves as a marketplace for selling items and a platform for promoting companies through a detailed company directory. Businesses can use these features to enhance their online visibility. Job seekers can use this platform to find job opportunities while service providers benefit from its free service listings. Furthermore, if you're a pet owner looking to provide the best for your furry friends, this free ad posting site is a haven for pet lovers. You can discover everything your pets need in one place. On Workity's free marketplace, users can post deals and products, create free classified ads, and browse through profiles and reviews to make well-informed decisions. Another investment tip is peer-to-peer lending. Peer-to-peer lending is when individuals lend money directly to other individuals or businesses through online platforms. Peer-to-peer lending is like playing money matchmaker. You can lend money directly to people or small businesses without involving a bank. It's a way to earn interest on your loan, potentially making more than you would with a regular savings account.
As peer-to-peer lending. So that allows you to lend your money to other individuals or businesses. Now, the reward that you get from doing this is that you will receive interest as the borrower repays the loan, plus you will get your money back once the loan has been fully repaid. And the benefits to the borrower is that this is another source of funding. So in case perhaps maybe they couldn't get money from the bank or they couldn't get as much money from the bank, this is another way that they can finance whatever they are doing.
For instance, if you have $1,000 you're willing to lend through a peer-to-peer lending platform, you decide to lend it to someone looking to consolidate their credit card debt. Then, this borrower agrees to pay back the $1,000 plus interest over a set period, say a year, at an interest rate of 7%. At the end of the year, the borrower pays you back the $1,000 plus the 7% interest, which amounts to $1,070. You've just earned $70 in interest by participating in peer-to-peer lending, a higher return than you might have earned by leaving your money in a traditional savings account. This way, you help someone in need of a loan and earn extra money for yourself by engaging in peer-to-peer lending. To begin with peer-to-peer, P2P, lending, you must first create an account with a P2P lending platform and deposit some funds using either a debit card or direct transfer. Next, you can choose to set the interest rate at which you want to lend your money or select from the rates provided by the platform. After that, you can decide on the money you want to lend for a specified period, such as 3 or 5 years. Various P2P lending platforms are available, with Lending Club, Prosper, Upstart, and Avant being the best platforms. Asset number 4, corporate bonds. A corporate bond is like a loan that a company takes from people who want to invest their money. Investors receive regular interest payments in exchange for lending money to the company. It's similar to lending money to a friend and getting paid back with a little extra. Corporate bonds can provide good returns for investors by offering a steady and predictable interest income. The interest rate, or the coupon rate, is set at the beginning and stays the same throughout the bond's life.
Well, I think corporate bonds are, in the A, AA area, have good premium yields over the treasuries. You want to be very diversified, and I would certainly recommend a bond index fund, a corporate bond index fund perhaps, or a total bond market index fund, which is dominated by treasuries and mortgage backs.
According to Bloomberg, the global market for safer, high-grade credit bonds is currently the safest it has been in almost 10 years, with a large portion of the market consisting of less risky single-A bonds. This shift away from riskier triple-B bonds is attracting investors who are preparing for potential changes in Federal Reserve policy. Some recommended corporate bond funds to consider investing in for February 2024 are HDFC Corporate Bond Fund, Aditya Birla Sun Life Corporate Bond Fund, ICICI Prudential Corporate Bond Fund, and Sundaram Corporate Bond Fund. By diversifying your investments and choosing reliable funds, you can benefit from corporate bond stability and profitability. Asset number 5, Certificate of Deposits or CDs. Investing in a certificate of deposit, CD, is like agreeing to lend your money to a bank for a set amount of time. In exchange for letting the bank hold onto your money, they agree to pay you back the amount you gave them plus some extra money called interest. The longer you agree to let the bank keep your money, the more interest you can earn. One reason to consider long-term CDs is that they often pay higher interest rates the longer you're willing to keep your money locked away. CD interest rates have grown significantly over the past couple of years. In fact, the interest rates for 1-year CDs have risen more than 7 times. Similarly, the rates for 3-year and 5-year CDs have increased 4 times and 3 times, respectively. CDs could be an excellent option if you want to earn more on your savings without taking risks like stocks or bonds. Furthermore, CDs are a safe and reliable way to grow your money as they usually offer better interest rates than regular savings accounts. However, there's a catch with CDs. You might have to pay a penalty if you must take your money out before the agreed time. To avoid this, you can look into no penalty CDs, which allows you to withdraw your money without any penalties after a short waiting period. Some banks currently offer reasonable rates on CDs, like Bread Savings, formerly Comnity Direct, Popular Direct, Quantic Bank, and Vio Bank, with rates as high as 5.3%. This is much more than what you can earn from many other investments, making CDs a safe and potentially profitable choice for your money in 2024. Are you still there? Here's a bonus tip for you only. Don't let market gurus influence your investment decisions. In his 2024 letter to Berkshire shareholders, Warren Buffett talks about his sister, Bertie, a smart investor. Bertie isn't a finance expert but knows enough to make good investment decisions in companies like Berkshire Hathaway. Buffett praises Bertie for being sensible and for knowing not to listen to all the so-called experts in the market. He explains that if Bertie could predict which investments would make money, she wouldn't tell everyone because it would ruin the opportunity. Buffett's message is clear. Be cautious when you hear about a sure thing investment like a hot stock or cryptocurrency. Many people want to make money off you, not help you. He advises investors to be like Bertie, who understands human behavior and can spot trustworthy advice from sales pitches. By following Bertie's example, everyone can avoid falling for false promises and make smarter investment choices that benefit them in the long run. And if you're ready to make a smarter choice for your business at no cost, hop on and list your business in Workerty's free directory. It's an ad-free platform where affiliates can freely show off their products. If you want to buy or sell a vehicle, Workerty is your go-to. And suppose you're on the lookout for your dream property. Workerty's free business listing directory meets all your needs. Join now. Have you discovered hidden gems from today's video? Like, share, subscribe, and watch the next video.